You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Chris Vermeulen. His website is thegoldenoilguy.com. Welcome to the show, Chris.
Hey, good morning, Jim. Thanks for having me.
On the West Coast, people watch the gasoline price bounce up and down. It goes along with the world price for oil. They don't wait the usual 90 days. It happens instantly. What are we going to be paying for gasoline over the next few days?
Over the next few days, yeah, it's going to be interesting to see what plays out here. We've seen a nice move up here in crude oil over the last month and change. And today we're seeing crude oil surge another 2.5%, so it's definitely going to increase the price of gasoline. And I think commodities in general, or crude oil for sure, is going to be putting in a significant bottom here over the next few months and could have a multi-year rally. Energies and other commodities are going to be more or less forced higher with a falling U.S. dollar that I think we can talk about going forward here.
The U.S. dollar has been on a huge surge the last 2 years. Any signs that it's topped and maybe on its way down?
Yeah, if you look at the monthly chart of the U.S. dollar index and you go back several years, you can see that the U.S. dollar has surged to some pretty significant highs. And on the monthly chart, it's actually showing signs that it's putting in a top. Over the next 2 or 3 months, we could see the final top put in the U.S. dollar. I don't think it's really going to go much higher than it did about a month ago. Overall, it looks as though the U.S. dollar is about to crumble. And, of course, it's the global currency, and commodities are based in the U.S. dollar. So, overall, when the U.S. dollar falls, we're going to start to see commodities get a nice lift, and generally, we're going to kickstart into a bull market. And, of course, that falls pretty much in line with my stock market kind of outlook, because it seems as though the market strength, the underlying strength of the stock market is starting to show cracks, that it is weakening, and we are getting close. We're in the late stages of a bull market for the equities market. And what happens is big money's rotating slowly out of equities, and they're moving their money over into hard assets like commodities as the safe haven play. And, of course, with the U.S. dollar on the verge of a sharp collapse and the late stages of an equities bull market topping, then I think we're going to see money rotate into precious metals, crude oil, and, of course, out of equities in the dollar. And there's going to be a huge shift in what's going on. And, of course, I think there's going to be a struggle for a safe haven play here, because we've seen bonds, U.S. bonds, tank, and the monthly and weekly charts are very bearish. And, of course, they're setting up for a pattern that I call 3 surges to a high. And what this pattern is these 3 strong surges that push the price of bonds to nominal new highs over a series of the last year and a half, 2 years here. And once this pattern completes and you get this sharp drop, which is the sharp drop we're starting to see now, usually that's the sign of a significant multi-year end of a rally in bonds. And this big, 30-plus year bond market rally, this bubble, looks as though it's about to burst. And, of course, with the U.S. dollar currency on the verge of collapsing, the U.S. economy is just so in debt. There's no way they can repay their debt. They're just printing themselves into a bigger hole. Everything is going to start to unwind, and the safe haven plays are going to be things that everyone needs. Utilities, food, energy, precious metals will be a store of value, so people will be moving their money out of the dollars and owning physical assets. So there's going to be this massive shift, I think, over in the next 5 years. I think a lot of this is going to take some serious time to unfold, but a big shift is coming and things are starting to unbuckle here.
Is that why the price for farmland is so high even now, even though this surge hasn't started?
It makes good sense. You really want to own something physical and something that has value, something that can pay you money, something that can generate food, stuff that you need going forward, because those are the only things that have real value. The stock market for equities, yes, there is value in the shares, but still a lot of it is just speculation. Everything is so overpriced in the United States, with the PE ratio being pretty much the highest across the board of all the other countries. So physical places are the good store, I think, going forward here for the long term of money until we see this financial system recalibrate. It's going to collapse. There's going to be disaster, I think, across the board in all different areas. And until we get this great reset of the financial system, physical assets, something that's tangible, you can't just create out of thin air by adding some zeros to a number on a computer, are going to be the place you really want to go.
Everybody talks about Greece and its problems trying to repay its debt. What happens when people start calling the U.S. debt?
Well, exactly. That's when things are just going to start to unwind, and the U.S., isn't going to be able to service their debt. They can't. There's no way they can do it. They're going to find some way. Of course, they're kind of the masters of the game. They're going to find some way to tweak it or change the rules to make it so that they don't lose. But who knows what's going to happen going forward? But things are going to definitely get uncomfortable for the majority. And of course, the U.S. dollar, the majority of the U.S. dollars aren't in the U.S. They're outside the U.S. because it's a global, more or less, currency almost. So it's not just going to affect Americans. It's going to affect everyone across the board when something severe happens to the U.S. dollar and people realize they don't want it. They're not going to get paid on the debt that they're, servicing the debt. So it's going to be really interesting, and you're definitely going to have to be managing and figuring out where to put your money as things unbuckle. Of course, it's going to be a volatile, very liquid kind of situation. Nobody knows which way to really run or where to go yet. And it's going to just have to be, kind of play it by ear as you go.
That's why it's probably important to listen to experts like yourself then, who, you're not looking super long-term on things. You tend to look at, maximum 3 months?
Typically for trading, yeah, I look for a week to 3 months for positions, but also I've got my own portfolio, which is long-term stuff that I put into funds. You let mature until the bull market is over, and then you rotate your money out into something else. So I'm always looking. I'm already planning for the majority of my money and my long-term capital of what I'm going to have to do here in Canada, where to put my money, how to store it, where to store it. So
are the Chinese still snapping up every piece of gold that they can find?
Yeah, they are. They have been bringing it in records amounts. Supposedly, there's rumors or that they're sneaking a lot in that's just not getting documented. It's going to be very interesting. And of course, going back to talking about Russia real quick, Russia and China are both unloading U.S. debt. They don't want U.S. dollars, and they're loading up with gold. And of course, this isn't good. We're the two biggest holders of, U.S. dollars over there are unloading and getting rid of them, and that's not a good sign. And of course, the Russia stock market, the charts are looking very bullish for long-term gains. The Chinese market has exploded to the upside. It's had a lot of investors start to jump in, which created a big surge. But overall, it looks as though those two countries know what's going on and that they're kind of working together, and they could be some pretty big powerhouses to deal with in the future.
We'll have more with Chris Vermeulen right after this.
More and more people are looking to the internet for intelligent, riveting, and thought-provoking interviews. To advertise on the Goddard Report and TalkDigitalNetwork.com, call 604-699-8600, 604-699-8600.
Welcome back. We're speaking with Chris Vermeulen, the gold and oil guy. What kind of a move are we going to see in oil over the short term?
Crude oil in the short term here, I think, is going to continue to get stability. I think the next couple months we'll probably see it trade sideways and slowly grind its way higher. We're waiting really for the U.S. dollar index to really start to break down. It's trading right at a critical support level that if this level on the U.S. dollar is broken to the downside, we're going to see commodities in general start to have a pop, especially crude oil. And I think we could see crude oil jump up to, $65 a barrel fairly quickly here. Now, it's interesting because there hasn't been a lot of interest in commodities in general for quite some time. We're in a 6-year bull market for stocks. Everybody's focused on the equities market. They're buying. They're overly bullish on stocks. And of course, it's been the complete opposite when it comes to commodities, precious metals. And you can see this when you look at some of the charts. If you look at the DBC, which is just a commodity index fund, or the DBA, which is the agricultural commodity fund, or the FUD, which is the food, which is both agriculture and livestock commodities. If you look at all these charts, you go and you look at the volume, the volume is tapered off to be almost nil. There's very, very little volume, which means there's no interest. Nobody's wanting to get involved in these boring commodities. And of course, the market always has a way of rotating. So whatever is completely out of favor will eventually become, the next hot thing. And that's where we're at right now. The equities is, they're overdone to the upside. It's just a matter of time now before they actually roll over and confirm that they're starting a downtrend. Commodities are starting they're reaching multi-year levels, the lows, the 2008 lows and below. U.S. dollar is topping, or when it falls, it's going to feed commodity prices and send them higher. So we've got this big shift that's coming. But of course, commodities, including crude oil, they're going to work themselves into this bottom here, and eventually we're going to see a massive rally into hard assets, commodities, going forward.
Is that good news for the Toronto Venture Exchange?
It is, and it's funny because you look at a lot of different country indexes. You look at the U.S. indexes, and most of them are bearish. And there's a lot of leading indicators for those, especially the U.S. equities market, that a top is coming. But when you go over to the Canadian side of things, and you look at the Toronto Venture Exchange, which are all the really micro-cap stocks, they're very commodity-based. And if you were to pull that chart up, it's actually trading at or just a little bit below the 2008 lows. And if you were to overlay, say, the Gold Bugs Index or the GDX or the Gold Miners Index fund over top of it, their correlation is almost identical. They move together, and that's because when commodities start to rally, these little tiny companies are like the speculative high. They're explosive plays. These little plays go from pennies, from 5 cents, 30 cents, whatever. They can surge up to $2, $3, $4 when you get a big commodity rally. And of course, they're highly leveraged. They're high beta stocks. So it's going to be really interesting to see this unfold. And again, nobody's paying attention to the gold miners anymore. They've just fizzled out. There's no interest, very little volume. They just haven't put in a bottom, and that's the same with the Toronto Venture Index. There's just no interest. Nobody's talked about it, and it is just kind of flying under the radar, and there's going to be a shift, and we're going to see big blue chip stocks, the S&P 500, the NASDAQ, everything's going to start to get hit hard. We're going to see money rotate into commodities, and then we're going to see this venture exchange likely start a major bull market when everybody thought it wasn't possible. This little index is going to skyrocket in value, I think.
Well, isn't that the secret really of good investing? Taking a look at what people aren't looking at right now, finding out the valuable properties, invest in them, and then when people finally notice this is the hot spot, you watch your stocks go up.
Exactly, yeah. Whatever people aren't interested in, eventually that will become, the favorite. It's same with clothes. It's amazing. You see the kids and everyone go through rotations in life. What's in favor is then out of favor, and what was in favor 20 years ago is right back. It's just a big cycle of being in favor and out of favor. And if you can time the market with a little bit of skill, you can catch a bull market in one area in the equities, and then you can pull out of that and you can go find what has been underperforming and that has been, trending down. Money should be rotating into it. You can go find the next one. And you can make a lot of money just focusing on the monthly chart and focusing on major bull markets that when technical levels are broken, take your money out. Maybe you have to wait in cash for a few months or whatever you have to do until you find something new that money is starting to rotate into and something that's going to start a bull market. And then you put your money into that and you let it go. So you really just have to, watch the charts, watch the big picture, and just pull your money in and out without being worried about the fine details of, day-to-day activity.
And stay away from the crowd or the panic mentality you get when you have a group of people moving in one direction or the other.
Right. Hopefully when you see that, something's up. When everybody's piling into something or getting out of something, there's a shift coming. Sometimes you get the biggest moves right at the end when those things are happening, but that's your warning sign to say start getting in or getting out of that position, depending what everyone's doing, to do the opposite and slowly start adjusting your position, knowing that there's probably going to be an end to that sooner than later.
Chris, for anyone who wants to stay on top of what's happening in the markets, how can they subscribe to your newsletter?
Sure, they can get the video newsletter at www.thegoldandoilguy.com. And there I provide a daily pre-market video that covers everything that happened yesterday, what's happened in overnight trading overseas last night, what's happened in pre-market trading today, and what to expect today going forward. And it's just one day at a time, and I cover different time frames. And, you know, every trader sits down, and I get lots of emails in the morning about people saying this is where they drink their coffee. They sit down, they watch my 8 to 15-minute video every day, and they say it gives them the complete spectrum of what they're going to do, how they're going to manage some of their own positions, what they're looking for. And, of course, I provide any trade that I do to my subscribers at the same time that I'm taking them.
Thanks a lot for chatting with us, Chris.
Hey, thanks, Jim. Appreciate it.
My guest has been Chris Vermeulen, the Gold and Oil Guy. This is a copyright presentation on HowStreet.com radio. Our popular YouTube channel is Talk Digital Network. Find us on Twitter at Talk Digital Net. Comments about the show can be sent to info@HowStreet.com. I'm Jim Goddard.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.